Looking at the time, it's already quite late. And like in every university course, it's a long day, a lot of information you got, a lot of different perspectives. But I would encourage you to really take the next 30 minutes really seriously, because we have heard a lot of different things today. We started with the strategy, we heard the perspective of the bank, and I have to say, from my role at EY as managed service leader, I see also that we are really supporting a lot of banks when it comes to digital assets, blockchain. But I see also a really increasing partnering with smaller companies, technology companies. And that is exactly now the panel that I would like to bring on stage and showcasing you what does it mean also from the other point of view. Is it really the fact that banks are already on the market, are already providing the best service to their clients? And I would really like to take that as a challenging question. And for that, we have over 125 years of experience in the banking sector now on stage. And I would like to start with Sina Meyer. Sina Meyer, please come on the stage. Sina is Managing Director at 21 Shares and responsible for Switzerland. You have over 25 years experience, also client-facing, and I will challenge you also from your perspective. Additionally, we have Adrian, who has been mentioned already several times from Meteco. Everyone in this room already perhaps know Adrian, and he has over 6 years experience in building exactly this other side. So not really the banking side, but the other side. Ivo Sauter is the next one. Ivo Sauter is the CEO of BitMEX, and also Ivo is bringing over 25 years of banking experience and have changed the role. So curious about hearing also your experience. And last but not least, it's Roland Krogers. He's partner at MLL Legal and also EY alumni, bringing a little bit also the legal perspective in here. So thank you for attending the stage. And I'm sharing that mic right here. How I would like to start is a bit different. I would like to start with speed questions to each of you. And I would say each of you have maximum 2 minutes to answer that question. And Adrian, you're looking already quite directly to me, so I will start with you. Meteco offers a custody solution. We have heard that. You have been mentioned already several times today, during the day. Can you explain again for us why custody of digital assets is fundamental different from a custody of traditional assets, from your point of view? 3 minutes for you, maximum.
Well, traditional custody is very much about security of assets already. It's about account management, it's about settlement, it's about managing the dividends, recollection, the coupon payments. But it's something which is very vast in scope, and despite its focus on security, it is something which also has a lot of administrative relations, a lot of compliance to it, and not necessarily about protecting the assets per se physically. You know, I was last week with one of our new American clients managing more than 12 trillion AUM today, and they shared with me a bit of the secret sauce behind their custody infrastructure for traditional assets. And what they shared is that they have this beautiful machine which processes billions and billions of transactions on a regular basis. And the biggest challenge they have is that they don't know how it works, because it was built decades ago by people that not only have left the company, but if I quote them, have all died. And so they have something which works, processes thousands of billions of assets, but is not really under control. When you get into digital assets, the security and the custody is very much focused towards how do I protect these assets physically in the virtual world? What do I do with the so-called secret keys, which protect cryptographically the use of these assets, and how do I ensure that these keys do not leak and that these keys are properly accessed by the right people in the organization? Almost everything else, the coupon payments, the dividends, the payment processing, is fully externalized to the blockchain. Of course, the bank can say, well, I'm still going to do it, but the reality is that in the end, it's not the bank's responsibility, it is the blockchain responsibility.
Super interesting point, and also a little bit different what we heard from the panel up front. So quite interesting point of view. Ronald, from a legal perspective, also knowing that the EY legal department has increasing topics of digital assets, but knowing that you are really dealing every day with that topic, what is a legal standpoint? What is really the most important consolidations or topics in offering digital efforts that you see?
So I think it's the first important thing is that you cannot offer blockchain solutions. So at the beginning you should focus on one solution. So if you focus on offering digital assets for asset management to give your clients access, or is it that you want to be a provider of digital assets, that you tokenize different things, or you create even financial products that are tokenized, or if you're just a service provider that helps your clients to tokenize their assets. And when you have selected one of these, I call it solutions, then you have to go in the details. And there I think it's getting difficult from a legal perspective, but also interesting, because a solution on paper may sound nice, but you also have to understand what does the solution mean from a legal perspective from A to Z. So if we take an example from practice, is that if you want to offer your clients staking, staking is understandable how it works, but you also have to understand what does it mean from a legal and tax perspective. So what is the staking reward? Is the staking reward something like an interest, which would mean for your client, is that really attractive? Because with interest, you know, we have the withholding taxes. Withholding taxes may be not very interesting for international clients. Or is it something else? And you can convince the tax authorities and structure it in a way that it's not considered as an interest and withholding tax-free. And with these small things, you see that it very much depends at the end on the structure. And what I recommend always is that focus on one specific offering to the clients and then make this offering as best as possible. And also always keep in mind your client's interest.
Great, thanks. Thanks from the point of view. Sina, your colleague today described a little bit also what 21 Shares does, gave a little bit of insight, but I have heard also in the room 2 or 3 questions, and I would like to take exactly one question that I heard in the background, and that was around really the institutionalization of clients and the interest from that. Do you really feel that this is increasing?
First of all, thank you all of you to be still here in the room because it's quite late. Second, coming back to the question, it's a very good question because what is really institutional clients? At 21 Shares, we have in our due diligence questionnaire written, it's 75% of the assets are into institutional clients. So, well, what is really institutional clients, right? This is always the questions what I ask myself. So up to now, most of the people, most investors for the kind of products we are providing with, it's private banks, banks in general, their family offices, hedge fund managers, high net worth individuals. Is this really institutional? I mean, I discussed this today with someone as well. And we see clearly from the outside, from Switzerland or even in the US, I have to say, or from other countries, that there is more and more institutional money going in. I'm talking institutional about asset owners or about a company with their book really investing into crypto. And this in Switzerland, I must say, they're still very hesitant and cynical even, you know, because they're checking, they want to know what's going on. But I haven't seen yet those kind of clients investing into crypto yet.
That's also quite interesting point of view and also a little bit different what we heard from others on the stage today. We will deep dive in a second on that. But Ivo, first a question to you, last but not least. From your point of view, are banks really interested in the topic of digital assets? And if so, where should they start from your point of view, from your perspective as the experience of 25 years in the bank and now on the other side?
Now on the dark side, yes. I think the interest of banks is increasing very much, as well in Switzerland. However, we see still only a few banks, typically smaller banks, which really have an offering. And if I talk about an offering, it's probably two sides which needs to be served. One side is the holding, where clients want to invest into this new asset class, and banks should provide solutions to that. We have seen today some banks up here providing that solutions, but again, the big banks, the international banks, only slowly getting into that. And the second part, which is missing, is probably banks providing banking services to people like us who are companies providing solutions in crypto assets. And I think that's the second differentiator between cryptocurrencies and crypto assets. While cryptocurrencies is something which people are looking at and clients are looking at, the crypto asset part is still very, very early in the stage. So if we look at banks, what they could do as a next step, obviously they should provide their business case, and we have heard it before. As part of that, they buy or build. I would say they source primarily. Any bank stepping into it, I would strongly recommend in looking into sourcing providers, looking at your core banking systems, and start there to see which sourcing providers can seamlessly integrate into that. Because I think that's probably the biggest entry step in phase one when you want to provide an asset directly. Obviously, an alternate we have seen here as well, or 21 shares, or the indirect investments. I think they are picking up more and more banks are offering them, especially since they are listed on the Swiss Stock Exchange as well.
May I say something?
Sure, of course.
Because this is really my topic here. Because I speak to banks like every single day, and I can really confirm what you just said. The banks, actually, it's exactly what the other banks here on Alfonso mentioned it, Jan mentioned it today on the previous panel. It's exactly like it starts with education. I mean, banks, they're looking around. When I started, by the way, more than 2 years ago, the banks told me, oh no, we are not interested because our clients are not interested in this asset class. During these 2 years now, it's a big journey because banks completely changed. I was with Alfonso in touch for quite a while, and they were very open about that. But some banks clearly shut the door and said, like, our clients are not interested. So I think the issue is exactly what you said, is first of all, they get pushed from their clients because the clients ask about this new asset class. And then you need, like Alfonso mentioned very early on as well, sorry I mentioned your name so often, is that people need to get educated to this kind of what is really crypto. Why are my clients really invested in this asset class? Because no banker, and I can speak from experience, I like, oh yes, we need to learn about this new asset class because they have other stuff to deal with, you know. So I think it's exactly what my panel colleague just mentioned, that the banks are looking around, they're looking for new solutions, and for example, 21 shares, we are a bridge between the old and the new, where we combine the two of them.
Great.
I agree with you.
I see Adrian wants to say something also on the topic, and I add just one question. What is your perspective on that? What is the current status of banks when it comes to the implementation?
I think the biggest issue that banks are facing today is schizophrenia. I wouldn't say that they are not educated yet. I think they understand very well what cryptocurrencies and to some degree DeFi is about. But I think that they are dissenting voices, and it's hard to align everybody around a single consensus that there is value here. If you look at a bank today, the main pillars of a bank, the main value of a bank is its network, its trust, and its strong experience in a way offering an expert service to the governments by applying compliance rules. Network, yes, it's true, but as soon as you start thinking about decentralized finance, there is so much standardization that the network of banks is going to start competing with an open network of hundreds of millions of users, which will not be subject to the custom APIs, custom front ends, and custom networks that are today provided by closed banking infrastructure. So this network, I think, is a temporary asset, which at some point will be commoditized and will be overthrown by the network provided by DeFi. And so this first pillar, I think banks are very much at risk here, and they don't see it yet. The second one is trust. Well, today you go to your bank because you trust your bank, but will you go to your bank because you trust your bank when the blockchain already provides a big part of this trust by itself? Yes, you may, but not for the same service. You will go to your bank because you want your bank to manage your keys or maybe manage the last layer, the last milestone of access to DeFi, which is custody. But will you go to your bank to manage everything else? Well, no, because the blockchain already provides this trusted service. So today, the service that banks have to realize and consolidate around is they are very much at risk, and they don't already see it. They have to connect to DeFi. They have to understand that the future of their role is around custody and connection to this open ecosystem. You ask me what is the current status? Well, the current status is that 2020 was very much about POCs, about innovation projects that would never materialize, of course, with a few exceptions, and our dear friends from BBVA know it very well. They were one of the first, indeed, tier one banks in Europe and potentially globally. I would say today we see 2021 a gigantic rise of demand in terms of number of RFPs, number of real projects backed by the business going in production, issued by security services, by the custody departments, and sometimes by the private bank. And 2022, I think, is really the start of a big trend in the institutional banking environment.
Having exactly that situation, provocative question, would you say that the banking industry itself sees your companies more as a partner or as a competitor?
Is this for everybody now?
For everyone. I
So
want
will
an answer
start
from
maybe.
everyone.
For me, it's very easy, very short. We are clearly partners because we help the banks that they can keep the assets with them, and we even not only provide a solution, but we provide also education.
We are both. We are an exchange and a broker. So we offer both. We offer it to banks, but as well to retail customers. But we invite banks or business to customer solutions to think about it, because as Adrian rightfully said, the business models are changing and banks need to adapt in order to survive. I personally still believe they have a big role to play if they start taking this role and seriously getting into this role. It's more about advisory, it's more about sourcing certain things to banks or from banks which you don't want to do itself as a retail customer. We see that in portfolio management, in research, and everything as well. So banks provide trusted services. In the blockchain, they should adopt their business model to provide services there as well. And only that way they can play a role in the future. Otherwise, other companies like Google, Apple, etc., which have taken over roles in payment services already, will take the role over here as well.
Mm-hmm. Erin, your point of view.
Yeah, maybe I want to add something on what you said before. I think DeFi is, of course, a very interesting opportunity for banks and asset managers. But just from a pure legal standpoint, I think DeFi is very tricky for regulated players because, as we have also heard before, I mean, you cannot just plug into DeFi and give a decentralized lending or participate in a lending pool, because participating in a lending pool is also money exchange. So you don't know your counterparties or what you're going to do. It's a huge challenge. Providing liquidity is also, giving out loans is also regulated under the AML Act, so it's also very challenging. What I see is much more attractive and is also coming up is dealing with NFTs and also with the buzzword metaverse, because it's much less regulated and the pace is much faster than DeFi. I mean, DeFi was very fast in 2021, but it struggles a little bit with the adoption in the regulated industry, and it's just because it's very difficult to adhere as a regulated player to this DeFi. What I see is that maybe DeFi can be interesting if we have like regulated DeFi, as Aave now doing with Aave Arc or others, where you as a bank can enter into a so-called half DeFi space where you have counterparties that are also regulated and you can rely on their regulatory status. So that's just...
So I would respectfully disagree with this statement. I think that we've already seen with cryptocurrencies, which have been for almost 10 years pointed as being soon to be banned and completely forbidden within banking and regulated environments, we've seen that there are ways to apply compliance frameworks and potentially updated or more revised compliance frameworks to these more modern technologies. It is true that for cryptocurrencies, for instance, initially, it was extremely tricky for a bank to accept a transfer in or to process a transfer out from and to unknown addresses. Well, today, we had multiple examples today in presentations. Thomas spoke about it also. You can do chain forensics. You can analyze where the transaction is coming from, where it's going, and it provides you what I would call a statistical score around the quality of this transaction from a compliance standpoint. I think we're getting precisely in the same direction with DeFi. DeFi today is perceived as a big sort of black hole of compliance. We don't know exactly what is happening, but there is so much value in there that I'm willing to bet that banks are going to start fighting with the regulators in a good way, bringing ideas, bringing new initiatives on how to use open protocols and standardize around these protocols while being statistically compliant, which ultimately is what you want as a bank and a regulator. You know that you will never be controlling 100% of the asset transfers. You want to ensure that it is extremely costly and difficult for a criminal to be doing money laundering or to be financing terrorism, whether using blockchain or big luggage with cash. And so I think as long as you can guarantee that the probabilities that such a risk materializes is low enough that the regulator feels that, in average, it's okay, I think this is where we're going to go. And there is so much value that I don't see how it could be otherwise.
But maybe, can I ask you an add-on question? That so you think it's the fully unregulated DeFi or in a regulated space?
I think. And
both regulated.
I have been proven wrong many times in the past, so don't take my word for it. But I think that we will see banks starting to interact with the non-regulated, open, permissionless DeFi, but they will apply their additional layer of compliance on top to provide a high-quality statistical compliance. The same way than today, when you have a transfer in of Bitcoins on your account, it comes from an unknown address. This address may belong to Osama bin Laden, for that matter. Who knows? Nobody knows. But you have statistical way to say, well, it's not so much related to hacks, to terrorist financing, or to money laundering. I think the same will happen with DeFi. It will be easier with some protocols where transparency is extreme, where you know exactly who is the counterpart on the blockchain. It will be harder with liquidity pools like Aave, Uniswap, etc., because you don't know exactly who's on the other side. But again, tools are appearing already, and I'm pretty sure that you will end up in a few years with banks that will be the digital vault, but everything else, lending, borrowing, trading, securities, derivatives, will be in DeFi, simply connected to the bank as a basic vault with compliance.
This is a point of view, and you see, that is exactly, we will see what the future will bring, right? If it is more the one
You have to
direction
invite me again in 2 years, and we'll see.
A question to really the implementation. I would like to just take one topic that has been touched already in the strategy, already on the market perspective. That is a little bit about change management and culture. Edwin, you just said also, you see already that the people are quite high educated. We have heard today a little bit the other perspective. What is your point of view when it comes really from an implementation perspective and change management? Is that something that everyone still has to take seriously, or do you say, no, that is really, everyone knows what we are talking about? What is your point of view? Do you want
Should
to
I start again?
Yes.
So I don't think, first of all, that all the people are highly educated about this kind of topic, because the most people I talk with, they tell me that they have no idea or really basic level. That's 99% of the people I talk to. I don't know if they underestimate themselves, I don't know, but I think there's still a lot to do, and there is still a lot of education needed. There is still of a transformation. Personally, I do not believe that there will be no banks anymore. Okay, I'm an ex-banker, but I think it takes quite a bit of time that the banks will not be here anymore. I think more that the banks will have a different role. And I don't think so that only banks will disappear, and some of my colleagues, they tell me that, oh, my children will never have a bank account anymore. I don't believe that, except they're still not produced yet. But then we talk about 15 or 20 years, then I can't see that a very long future. But I must say in the next 10 years or 15 years even, I don't believe that banks will disappear. And coming back to your question, to the point, is that I think that we should, again, sorry for telling you one more time, education is key. first we need to start implement in the banks that we can give an advisory service and all these things, that people have a clue what they talk about, and giving them the knowledge to their clients, so they will also be trustful to their clients and have kind of a good relationship with the clients, because if they show that they're educated, it will be like a dominant system.
Yeah, I fully agree. I mean, education is very much needed. And I mean, looking at us, we already have disagreements in how things go, and it's our daily bread and butter, right? And the whole thing, the whole cryptocurrency or digital asset segment moves so quickly that even myself, I have to educate myself daily. There are new chains, new possibilities coming up, DeFi, staking, all the things we have here today. It needs a constant education. In terms of implementation, I think we have the big advantage those days that there are service providers who help, who can help regulate the players, service providers who have proven themselves, service providers who have integrated into core banking system, into the old traditional world, which makes it much easier for a bank. But again, banks need to wake up, banks need to become active, and I talk about all banks, not only the ones on the forefront, which I'm very great that we have so many here of them, but all of them need to, as well for Switzerland as a marketplace, and keeping on being one of the leading banking hubs. This is very, very much needed.
I don't know if education is the solution or if just time is the solution. And I'll demonstrate it by example. In 2015, I was invited by one of the Swiss banks, which I'm not going to name, to train the whole executive board and board of directors of that Swiss bank about Bitcoin. In 2015, this was kind of visionary. They were interested. Should we use it? Should we know what it is? And I came there, I presented Bitcoin, and of course, everybody was super skeptical. This is a bubble, it's going to collapse, so this is just a scam. But they were kind of excited by the criminal nature of it. They almost like they were criminal themselves. Yeah, you could buy drugs, you can buy hitmen, you can buy weapons and all on the dark web. It's Adrian, don't come too close to us and don't shake our hands. 6 years later, 2021, you would expect that they had my first training, and they probably had all of us meeting them and giving them the most brilliant trainings on the evolutions over the last 6-7 years. It's not just Bitcoin now. There are like thousands and thousands of cryptos. There are hundreds of millions of potential users. And there are trillions of values out there. Invited me 6 years later, May 2021, last year. I came with an updated deck. It was just after Elon Musk had announced his involvement with Tesla. It was after MicroStrategy had made the investment. All of this momentum was coming back again. And I had 10 slides. Presented the first slides, all of the same faces, same CEO, same CTO, same CFO, same chairman, same board members. Presented my slides, I arrived on the title page, and you know what they told me? Half an hour of debate, Adrian, Bitcoin is not an asset. And I said, well, maybe we can debate Bitcoin is not a currency, but I think we all agree that Bitcoin is an asset, right? No, because it does not pay dividends. And at this point, I stopped, and I tried diverting the attention. And I realized it's not really about education, it's about generation. And at some point, you have to have people that are taking over and bringing new ideas and willing to take risks, and realize that it's not because you are today the incumbent on the market that you're going to be forever. I very much agree with you that banks are here to stay. I very much agree that the role is going to change. But I think that banks don't realize how much the role is going to change. And it's going to be a hockey stick. Maybe it's going to take still 4, 5, 6 years, but suddenly it's going to happen, and a lot of people are going to lose their jobs.
Sorry, I have to intervene. This is interesting because before it's all like that. I don't think it's something about the age, sorry, because I speak to people that are over 80 and they're super interested into cryptos. I think it's about if the people are interested in evolution, in technology, and be open-minded to learn something else. And look, sometimes they're 20, 30 years old and they're not open to learn something new. So it's not about the age. I have to intervene to say that.
We're about the same age, so.
I think the common thing is that every one of you agrees that it's more an evolution than revolution. The revolution happened, like you just said, perhaps 2015, where the topic came up and the first banks were interested. As I always try to hold my promises, I will not ask more questions. But I hope that you felt that there are a lot of different points of views, from compliance to where does the journey look like. And I encourage every one of you to really take now the networking time to approach everyone here on the stage and start a discussion. The banks perhaps, or also the other side. And what I can really tell is that also there are also banks who are way advanced, right? Even being now quite critical, I know that, like also on the stage today, 2 or 3 banks are ahead the time. And that is exactly the way to go. So I think that is a common sense where every one of us are agreeing, right? So thank you very much for the time. It was interesting discussions. Thank you for listening. And now I'm handing over to Zani to close the session. Thank you, everyone.